Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So during this half an hour webinar, half an hour video, I will tell you what's going on the markets, and we'll try to look for decent trading occasions. First, as always, let's check the macro calendar. We are obviously still influenced by the geopolitics and increased tensions over Korean peninsula, but it is always nice to check the calendar before doing anything on the market, especially trading live. First important event this on Wednesday was a speech from Mr. Wheeler, his Reserve Bank of New Zealand governor. And his speech didn't change much. The candlestick after his speech was more or less, closing price was more or less in the same place as on the same price as opening of that candle. After that, New Zealand dollar was a bit stronger, then weaker again. So nothing significant, no significant changes for this currency for New Zealand dollar. What else we had was a pack of data from Eurozone, better than expected economic sentiment, business climate, and industrial confidence, which probably is helping euro, but euro dollar is going down after yesterday's downswing from the second half of the day, but most probably that better data is helping to keep this downswing small and not lethal. What do we have still today? In 28 minutes we'll have GDP from United States, so very important data. A bit earlier, as always, on Wednesday before non-farm payrolls, we do have ADP employment change, so the same number but from a private company, and 185,000 is expected. Previous one was 178. And we'll finish this day, well, not the day, but important events on the calendar. We'll finish in 2.5 hours. Yeah, crude oil stocks change number, and we are expecting a decline of almost 2 million barrels. As for today, that's for today, and tomorrow we are expecting the pace and the calendar to pick up, because we do have unemployment change in Germany, CPI from Eurozone, important number, and PCE from United States. And on Friday it's a non-farm payroll day, so definitely there won't be a lack of volatility. We should get some nice movements on the market. As for the tensions over Korean peninsula, it's like nothing happened. So the second half of the day we retraced all the movements from the first half of the day, which on many instruments created reversal pin bars, well, I read a comment a few days ago that when there were tensions between over Cuba 30-40 years ago, I won't tell you exactly, 50-60 years ago, I guess, even, and we were on the edge of the nuclear war between Russia and United States. On trading floors, someone said that you should buy anyway, and the trader asked why. Well, if there's gonna be a nuclear war, well, you won't have to cover your long position, right? Because everything will be gone. And if there will be no war, the stocks will go up. So the best strategy for a situation like that is to buy anyway. And actually, I was doing research on my own. I was checking the stocks, gold, currencies in times of war, Korean War, Vietnam War, Second World War, and all the major conflicts in the world. And I found out that most of the conflicts, the price of stocks, shares was going up in most of the conflicts. So when there is a start of the conflict, anticipation, the price is usually going down. But once the conflict starts, the price of shares indexes usually go up. So that is why maybe that's one of the reasons why stocks went higher. Many experts they commented that way that after North Korea fired those missiles, there was no fire and fury. There was no strong response from United States. So that showed us that there can be a conflict, but not exactly tomorrow, not in next 2 days, because United States failed to deliver a strong condemning response to the North Korea. So that is why tension dropped a little bit and stocks went significantly higher and safe havens were abandoned. So that's the situation from the fundamental point of view on the market. From the technical point of view, it all comes together, right? So many resistances, supports were broken yesterday, and that movement, that reversal from the second half of the day was and is just a natural comeback to test the recent supports as closest resistances, and to test the recent resistances as the closest supports. But I will show you that once we will start to analyze charts from the technical point of view, which we will do now. First can be cable, which is after this bounce from 38.2 went significantly higher. And look, this reversal did not happen in a random place. That was 23.6 Fibonacci, which was also respected at the end of June and at the beginning of August. So after bouncing of one Fibonacci support, the price stopped on a Fibonacci resistance. Also, this red line is the uptrend line, and the price bounced off this uptrend line. So that wasn't a random place. And as you can see, we traded that. You know that from yesterday. We opened long position here, closed that here. That's a good one. That's a good one. Almost all upswing. So we in this movement we got 130 pips, and all together from the top to bottom you could earn like 200. So that's quite a good result as for now. The situation on cable, I would say it's neutral. I don't want to say that it's a buy signal here, because I don't see any potential strong support. If the price would bounce from this level or from this level or break this level, that would be a strong buy signal, but I don't see that. I don't have that on the chart right now, so for me there is no buy signal here on cable, but there is no sell signal on cable either. Euro dollar is dropping sharply, and here also we had the long position. So after we went higher, after we went with a long position, the price made the local drop here and a local top here, giving all together like 320 pips, and that position gave 260. So that was a bit better timing, and that was a bit better position than on cable. Still all right. Still the closing of that was in a good place. As you can see, we were able to catch the top here, because now the price is 100 pips lower, and after we closed the position here, the price wasn't higher. Obviously we could close that here, but it's very hot, and actually I do not believe that if somebody would close here, that would be skills, that would be pure luck. It happens from sometimes. I did that once. I have this position in my history. I'm showing that trade on a live trading account, but it's really hard, and I do not consider myself as a that trade as a great knowledge, but just a pure luck. And as we pointed out on our Twitter account, Roberto D'Ambrosio tweeted about this head and shoulder formation, left shoulder, head, and the right shoulder. And we're having that. The price is under influence of this formation and is declining. The first potential target will be here. As you can see, it was respected here and here and here. So actually, I'm gonna adjust this gray area because, well, upper line is bottom from here. So let's make it like that. Okay, but there is also this bottom from here, and let's also place it here. Make it. Let's adjust this. Okay, here. Okay, and in this case, here, and yes, that's it. So the closest support right now is this light blue area, which is around 118.90. So to this support we still have 35, almost 40 pips, which makes it a good short-term midterm trading occasion, in my opinion. Well, as long as we stay above this blue line, the sentiment is definitely positive. Let me check the Fibos here. Okay, it's like that. 23.6 wasn't respected much, so we may stop here around 38.2 here, or around 50. That will be a nice area for a reversal. It's a bit wide, so that's why that's not the strongest signal in the world. But pay attention when the price will be around this level. As for now, the short-term negative sentiment should continue, but those lower prices most probably will be used by many traders to open positions with the trend. New Zealand dollar to American dollar. This is this candle from overnight when Wheeler was speaking. No significant changes here. With the recent development here, we can remove this, and I would say that we're having a wedge here. Kind of a flag, but it's more of a wedge. And with a breakout of this lower line of the wedge, the downswing should continue. Next one is gold. And gold, when we compare gold to other safe havens, now we can see that gold is quite strong and resistant to the recent downswing. And we're just testing. We got, I think we got the number ADP, and American dollar is getting stronger. Yep, American dollar is stronger across the market. So probably that ADP number was better than expectations. But after the breakout of this resistance on $1,300 per ounce, it would be nice to test it as a closest support before going any higher. And that's what the price is doing right now. Maybe this drop is a little bit too sharp, and especially on the daily chart, there is a shooting star here. maybe that's a bit too sharp reversal, but this price action of the price breakout and then testing recent resistance as a closest support, that's just a typical price action and shouldn't be a surprise for anybody. So here will be a very important support on this gold area, and the next one will be the black line here, which is an uptrend line. And in my opinion, this uptrend line is even stronger and more important than $1,300 per ounce. So as long as we stay above the black line, the sentiment is positive and most probably will be used as a every drop will be used as a potential place for a reversal. I would like to check one thing, if maybe we do have a correction equality patterns here. Let me check this support. Kind of. This one is a bit smaller. So yes, those two corrections are almost the same, right? This one and this one. So what we can do is to copy that. And we can see that the potential target for this correction is here on $1,300 per ounce. So one should not be a surprise if the price stopped here. That's a good one. S&P 500, that shouldn't be a surprise for anybody that Americans used the dip to buy, and also that didn't happen in a random place, because this red line is a long-term uptrend line which is supporting the price from the beginning of the year. So that wasn't a random place, that was a strong support. And also what the price created here is a flag restricted with blue lines from the top with this one, from the bottom with this one. Also the end of the flag is an inverse head and shoulder formation, and actually we got the breakout of the neckline and the upper line of the flag at the same time. The price advanced higher and the price stopped on the first local resistance. So I would say that, well, some may think that there is a buy signal already because we broke the neckline, but I would wait for the price to close above this green area for the buy signal. And if it will happen, if the price will manage to close above this resistance, that should trigger buy signal, and that should open a way to new all-time highs. As you can see, we stopped here in the beginning of August. The price made false breakout, but price closing above this resistance should allow to climb higher and higher and higher. I don't see any problems with that, with the current sentiment. And dollar index is showing the same movements as any other instruments, with strong reversal here. We had a drop after this head and shoulder formation. We made new midterm, long-term lows. We broke neckline, we broke horizontal support, and now we just have this typical movement of testing the recent supports as a closest resistance. First one can work but does not have to, because the second one is much stronger. Why is it much stronger? Because it's a combination of two resistances. So first one is a long-term downtrend line, first one is a dynamic resistance here, and the second one is a horizontal created by the neckline of this head and shoulder formation. So here we do have crossing of those two important supports, and the price can really go lower from here. But don't go short as soon as the price will touch this level, because to enter a position you need to see a trend change and a sentiment change, and you see that by price patterns or candlestick patterns. So here so far we do not Well, first of all, the price is not there, but once the price will be there, you should enter with a short position only. Once you will see a bearish price action there. So, for example, a shooting star, a bearish engulfing, an evening star, or a gravestone doji, or something like that. And a silver also, well, silver did the same as gold and also is defending on the long-term downtrend line. So precious metals are kind of resistant to this reversal seen today from this escape from safe haven assets. Precious metals looks much better than, for example, Swiss franc. American dollar to Japanese yen made a false breakout of that support. Bounced off this support. They didn't manage to make to go to the lowest levels this year. They bounced off the support from the April, and now the price is aiming higher. So that's a strong support. This area here. So actually, there's no sell signal here anymore. Especially that we also broke the trend line, the midterm trend line here. American dollar to Canadian dollar is bouncing, almost touched those lows, and we do have a bounce. There was a double bottom bounce. Here is a double bottom bounce as well, so we can expect the price to climb a little bit higher. Euro to Japanese yen made the new highs, so we can remove those Fibonacci's. That was expected. Once the price broke this, bounced of this horizontal, made a false breakout here. That's the power of false breakouts. Look, there was a false breakout below that support, and after that, after traders noticed that it's false, the price advanced higher. We broke the upper line of the wedge formation. We tested that as a support here, and the price made new actually long-term highs, because as you can see, we're on the highest level since February 2016, which is pretty significant. Euro to Australian dollar still in a positive territory after we broke the neckline of this inverse head and shoulder formation. It could be better, but it's not so bad. The price is still in a buy mode. And American dollar to Swiss franc. Here we can see this reversal from Swiss franc. Yesterday candle is a beautiful, absolutely beautiful pin bar, and now the price is advancing higher on a daily chart, on a weekly chart. It also will be interesting because here we do have a bullish engulfing on a weekly chart, and most probably we can have a hammer on a weekly chart here. So double bottom formation created by two bullish reversal patterns, that can be a significant buy signal on this instrument. Australian dollar to American dollar still in a positive territory, but it does not look so good as yesterday. We are still above the uptrend line, which is a very good sign, but in overall the situation is not so good as it could be. American dollar to Mexican peso. So here we had a breakout of this downtrend line, but straight after the breakout the price created a shooting star. So the future of this breakout is not so clear. So far we still use this horizontal area as a support. Okay, but I think that this situation is no longer so technical as it was some time ago, so I wouldn't tell you what are the odds for an upswing, what are the odds for a downswing, because we have other instruments that look much better than this one. I'm sorry, I didn't want to touch that. Okay. So yes, this is American dollar to Mexican peso without a decent trading signal here. Well, the sentiment is still positive. After we broke the downtrend line and we are above the horizontal support, the sentiment is positive, but that's not the best buy signal in the world. British pound to Japanese yen. Here you can see this reversal from safe haven assets. but that's not a major signal either. New Zealand dollar to Japanese yen can be a good trading signal because we had this double bottom formation on uptrend line, and here the potential target is here. So that opens a way to this gold resistance here. Okay, we also broke this. That's here we do have a double bottom formation, but here we also do have a double bottom formation, much bigger one. So that actually is a potentially nice buy signal. American dollar to my local currency, Polish zloty, is making a nice upswing here, and not in a random place. As you can see, that's a weekly chart, so that's long term. 355, 352 was a decent support because it was a support in 2015, it was a resistance in 2012, and resistance in 2011. And here the price, maybe you don't see it properly, is creating a hammer, is creating a pin bar, which actually can start a correction here on the market. It can start a bullish correction on this chart, and the bullish correction should aim at least to 370. WTI, well, despite Harvey, which is influencing oil production, we do have oil price going lower. Well, it affects mostly gasoline, and the price of gasoline is climbing higher, but due to the refineries which are shut, the demand for crude oil is lowering, and that's why the overall price of oil on the markets is lowering as well. So we are on the lowest level since the end of July, and the sentiment is still negative. Euro to British pound is climbing, is going a little bit lower, but as you can see, we are still above two important and quite steep supports. First one is the upper line of the channel up formation, which usually should be the resistance, but here it will be a support. And also you do have this steep uptrend line support here. So actually, as long as we stay even above the green area, the sentiment is positive, so there is a lot of place for a correction. That's why I wouldn't enter this position, exactly because of that, because there is a lot of place to make a correction, and that correction wouldn't even change the trend. And DAX. DAX went significantly lower yesterday. I went to the lowest levels since March, and as Americans, they made a sharp reversal here. There is a potential for a double bottom formation, but as long as we stay below the red area, the sentiment is still negative. Not even breakout of this level, not even breakout of the upper line of the wedge would change it, because here the red area is the most important resistance here in the mid-term, in the short term, in the long term for the DAX. That's in my opinion, because it proved to be important in July and August, and traders had many chances to break that, but they failed. Let me remind you about the calendar. So ADP was much better number. That's why, well, from the price movement itself, we could guess that ADP was better, right? Because American dollar went stronger, so that wasn't a big surprise. But in 1 minute we'll have GDP from US, and we will be able to see a reaction there. Let's change on the dollar index. I think the reading could be as expectations. Let me check the other instruments, or maybe slightly better than expected, because euro is going lower as That's a strong movement. Gold is more or less on the same place, but euro dollar is sharply edging lower, so most probably GDP was better than expected. Let me check that. Yes, that's the one, 3.0%. That's a good one. That is a good reading. PC the same. So this sentiment should continue of a stronger dollar, and on New Zealand dollar to American dollar we broke, for example, the lower line of the flag. This stronger dollar should help to test the $1,300 per ounce soon. So guys, that's the situation on the market right now. Those movements should continue. Now we'll have a short break, and after that a webinar about MetaTrader 4, about using this platform. And after that, and tomorrow we're having another daily analytical report. Thanks very much for listening and watching.